Okay, you guys, we're going to move on to 13.2, which is recording employer payroll taxes. So up until now, we've been dealing with the employee taxes. And so now we're going to look at the corporation, what they pay in taxes for payroll. So our first learning objective here is to calculate and record employer payroll taxes. Employers must pay the government the taxes withheld from employee earnings. So what we've been calculating in those payable accounts, we are responsible as a corporation to pay the government these taxes. So the amounts withheld are recorded as liabilities, again, so those payable accounts we've had to the business until they are paid. Okay, then this is the different part. Employers must also pay several of their own payroll taxes. These taxes are 100% the responsibility of the business and are not withheld from the employee earnings. So there'll be a couple different things we look at here. So the first one for an employer payroll tax is the employer Social Security tax. So this is the exact same amount that the employee Social Security tax was withheld from the employees up to that tax base limit. So once they get to that tax base limit, it's different. Then the second one is the employer Medicare tax, again, equal to the amount withheld from the employee's payroll. And there is no tax base limit on this one. And then these are the two new ones that are not on an employee as well. So something we have to calculate differently here. First one is the federal unemployment tax. So a federal tax paid by employers to administer the unemployment program, commonly referred to as FUTA, which is Federal Unemployment Tax Act. And then the second one that we'll look at here is the state unemployment tax. A state tax paid by employers that is used to pay benefits to unemployed workers, commonly referred to as SUTA. So as you guys have seen the things that are going on right now, these two are big. Okay, so this is being used a lot more with that unemployment. So SUTA and FUTA, and we'll talk about how we calculate those two. Okay, so federal unemployment tax is 0.8% of the first $7,000 earned by each employee, which accumulates to $56 per employee per year. Okay, as long as they make $7,000 in that year. And then the state unemployment tax is 5.4% of the first $7,000 earned by each employee. And then again, that accumulates to $378 per employee per year if they make that $7,000. So this is the chart that you guys would be filling in to figure out the earnings here. But first you're going to take the prior accumulated earnings. Okay, so you take that from the pay period, pay stubs from before, and figure out those accumulated earnings. Okay, and then the second column here is to enter the difference between the FUTA tax base and prior accumulated earnings. So remember that base is 7,000. So if you look at Carrie Wells here, she has accumulated earnings of 6,490. Okay, that means she has 510 left to get to 7,000 for that tax base. Okay, now up here, John Butler has made 27,195. Well, obviously he's already passed that 7,000, so there's zero more to get there. So these are the difference. You'll take 7,000 minus the prior accumulated earnings. It'll either be zero or whatever is remaining. Okay. Third thing is to enter earnings for the current pay period. So this is what they made this check, this pay period. So this person, Carrie Wells, has made $1,444, okay? But she only needs 510 left to get to that tax base. So how we figure out this one over here, number 5, is you're gonna look at the smaller number between columns 3 and 4 here. So if you look here, 0 is the smaller number. Well, 0 is what they've earned here. They've already hit that tax base. Over here, we have 1,740 and 1,494. They haven't quite reached that 7,000, but this is what they've earned this pay period. So that's going to be what my FUTA earnings are here. Okay, and then for Anne, which one's smaller? Okay, the 240. That's what's left. Or that's what they've earned this time, so that's what they're going to pay here. 0 is less, 0 is less, and then 510 is less than 1444. So 510 will go here. and then you would add them up to get this total earnings here, FUTA earnings. So formulas with the percentages here. So unemployment tax payable earnings was 2,244 times the federal unemployment tax rate is at 0.8%. Okay, that will give you $17.95. Okay, and then the unemployment taxable earnings and the state unemployment tax rate. So the same amount for those earnings times 5.4% equals 121.18. So when you're doing calculations in the problems, you'll see we'll do this and I'll talk you through it here. Okay, and then we need to go into journalizing these employer payroll taxes. So on December 15th, you recorded employer payroll tax expenses of $757.01 for the semi-monthly pay period ending December 15th. Taxes owed are Social Security tax, which was $500.77, Medicare tax, $117.11, and then we have our FUTA is $17.95, and our SUTA, which is $121.18, and it's memo number 44. So we're putting this aside for the government. So our T accounts look as so. We have a debit for our payroll taxes expense. Remember, we've used that before. Okay, so we're putting that debit in of $757.01, the total of all these. Okay, our Social Security tax payable is a credit, and Medicare tax payable is a credit, unemployment tax payable credit, unemployment tax payable state credit. So remember, payable are those liabilities, so they are our credits until they are paid. So first thing for doing a journal entry, depending on what number it is here, I need to do the month or not. And it looks like we're on line 7, so the month is already done. So just the 15th. Okay, we need our account debited, which is that payroll taxes expense. Memo number 44. And we have an amount debited, that total of $757.01. And then we're going to list those payable or liability accounts, and I would list them in order that they give them to you. Social Security tax payable was $577, and so on and so forth. So FUTA usually is first and SUTA second here with the unemployment tax payable. So that's how we will journalize it. And then we will go into the work together lesson here as well.